I was also meeting with one of our portfolio founders this morning, and the sentiment is for the builders. It's like, great. Guess what? The time horizon has been extended. As we have market malaise, as we're seeing, it's just more time to build.
This episode is brought to you by Aries Markets. To learn more about Aries Markets, follow the link in the show notes below. Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. All right, everyone. Welcome back to another episode of Bell Curve.
We're back,
and we're live.
In person.
You can't see us, but...
I'm trying to
figure out for the best.
Trying to figure out what volume to be speaking at.
Is this
the volume?
It's a new, but yeah, you're lovely.
I was telling Michael about this guy. We're not naming any names, but he randomly speaks at like 2x volume. It's like, yeah, we're in a conference room together. You're screaming.
Yeah, you got to relax it. Yeah.
Did you hear me? Yes,
Yeah.
Everybody heard you.
Yeah. You're screaming.
Yeah. I was gonna maybe overshare. I had you ever had like a wax buildup in your ear or something like that? I had that for like a month, and Yano was like, "Dude, you are fucking screaming at me all the time. What is happening?"
Sorry, I just can't hear you.
Yeah. Anyway, that's probably a little bit too much information, but we're recording live from the Pantera house. We're at ETHDenver.
Pantera bread.
Yes, Panera bread. It was right next to the McDonald's where we all put our applications in.
For them hosting us. We could do it in the shitty Airbnb we're staying at, but that would be pretty weird.
Fellas, can we get a sentiment check for folks who are not on the ground at ETHDenver? What are the vibes like?
I mean, Bearapalooza was pretty poppin'. People were like, drinking and smoking cigarettes and like listening to talks. So I thought that was pretty good. I think the drop pre-conference is just like a nice kick in the stomach that a lot of people are just like, God fucking
down bad down.
I think it's like every single trade of every single industry is having a bad time. Like we discussed this, it's like Nvidia blows out earnings. It's like fastest sales ramp in history. All this stuff. Stocks down 4% day after. It's like buds can't catch a break right now across kind of anything, even in the energy complex. Like I told this story before we went on, but like I checked my phone the other day to see what was up in the stock market. It was like Walgreens. It's like 0.5%, the only green name on my stocks list. Like,
we got a green one. It's tough out there. I mean, I think there's broad uncertainty leading to contagion, leading to risk off. It's just a lot of unknowns right now. And I think on the crypto side, the other thing we were talking about is it's easy to forget, but there were 30% plus pullbacks in 2021.
Some even bigger ones. There was like a 40%.
Well, right, exactly. But there were 3 of them, and one of them was, I think, in May, post Elon going on SNL. Mm-hmm. That was the biggest one. That was like a 40-50%. Yeah. This stuff happens. I think it whipsaws around. I was also meeting with one of our portfolio founders this morning, and the sentiment is, for the builders, it's like, great. Guess what? The time horizon has been extended. And everybody, I think, went into 2025 expecting, all right, we got to get to testnet, we got to get to mainnet before the cycle pops and like it's over.
Sell
and
at $150K, then I'll go on vacation at $200. It's like, okay, yeah, you made all those plans.
But I think the base case now is like, as we have market malaise, as we're seeing, it's just more time to build. And the worst thing that could possibly happen for a lot of these companies who are, at the precipice of getting out, launching their token, launching their platform, the worst thing that could possibly happen is you try to launch, you try to time it at the end of the year, and then we go into another, 2022 equivalent in 2026. I don't think that that's the case. I think, we were discussing, November 2025, where do you see Bitcoin? November 2026, where do you see Bitcoin? I don't know exactly what the numbers are, but my base case right now is that wherever we are in 2025, November 2025, I think we're probably about 50 to 75% higher November 2026. And so, adjust your timelines accordingly.
Yeah, the builder stuff resonates for, one of the challenges of actually company building in crypto has been it's so short-term oriented, and there are so many projects that aren't necessarily good, but they raise at a huge valuation, they give massive token grants, and then they fold a couple years later. But that's the amount of time that it takes to suck talent out of your company. So there's actually kind of this funny Goldilocks moment right now where there's still some amount of attention and money and everything going into the space. There's positive momentum, but it's not somewhat like, honestly, a lot of these, not super high quality token projects are kind of falling. So it makes it easier
That's
to
okay.
company build.
Look, there's only going to be probably 10 to 20 winners.
Right.
Yeah.
That are, between 10 and 100 billion scale. And like, I think that's what you got to play for.
Yeah.
There was a similar amount of startups that have died every year for the past 20 years, just not in crypto. It's not like we're having big funerals for them.
I totally agree. One thing I'd be curious to get your guys' perspective on is this is around the time when there's all these hallmarks of bear market sentiment coming out. There are people condemning, the short-term speculative sort of stuff. There's like these call for real use cases and return to fundamentals. But one thing I've been thinking recently is people like to apply kind of more traditional public market valuation metrics to a lot of these things, like price to earnings, things like that. But these are mostly, for the most part, still very early stage startups. So it seems like there's a little bit of a mismatch sometimes when people are looking at like PE ratios for like a 2-year-old company. That just doesn't really seem that relevant. I mean, you guys, from a VC standpoint, like that isn't something you'd look at, right? When you're
early
underwriting
stage technology meets public market liquidity. What could possibly go wrong?
Well, it's interesting.
I do think there's I don't know, like the point that you made, I think on Twitter, which was about fundamentals are future looking and things like that. Like there's Maker still trades at 3x price to sales, maybe a little bit lower than that. I mean, you can start to wireframe a case of okay, price to sales, you're probably undervalued. Price to earnings, you're trading at maybe 12 and the stock market's at 26 and Nvidia's at 30 to 40. So there's things that you can start to price in, but I think the problem is what is the moat? Yeah. What is the long-term stickiness of the protocol or the product? And I think stablecoins are very sticky in the sense that we either use USDC or USDT and we save in one or the other. Perp's pretty sticky. Things like Radium, where you see people shilling it, for almost a year, and I think Radium is a good protocol and has money flowing to it. But I feel like one of the biggest open secrets in crypto was that Pumped Out Fund was developing their own DEX.
Yeah,
it's you can just get bricked overnight by stuff like that, and we don't trade Radium, but there's huge distribution risk when you're not the actual source of the flow.
So Radium's trading right now at $2.30. When news of the Pump Fund AMM became official, it went from $4.20. Yeah, it dropped 30% in a matter of hours.
I think going back to it though, I mean, fundamentals, I do think is where we start to move.
Yeah.
And I mean, look, Snap went public in 2017. It didn't turn a profit until 2021.
Yeah.
And
that was a small profit.
And that was eking out a profit.
Well,
and then
Amazon
it
$10 million,
right?
And Amazon famously as well. But you knew, I mean, you just had more confidence that Bezos over Evan was going to be able to turn on the money spigot whenever he wanted to, and he talked about that too in his letters. But there are fundamentals. There are also weird fundamental trading patterns in public markets as well. And so it's not just, crypto is, it's a 2-year-old startup that's making $2 million ARR. How do we value this thing? No, you're valuing off of ultimately cash flows, ultimately buybacks, and the prognosis for the future potential growth of both of those numbers. And that's what it comes down to. It's how do you get to cash flows? Well, it's revenue minus cost. If you reduce cost, you have more cash flows. And, we just saw this to the point, with Maker as well. Rune puts out a governance post, which is entitled Bring Expenses Down to Zero.
Yeah.
Guess what? Maker's up 70% in the last 2 weeks.
You know how many people read that post? You can see the views on the forum. 42 people. and I'm at least 15 of those. Just me manic reading it, rereading it. Yeah. But the way I like to describe the Maker buyback is you have to personify it. So let's say you had an autistic friend named Tony, okay? And Tony really likes
really
Maker.
painting a word picture here.
Glad we're off camera today.
Tony really likes Maker, okay? But the only way that Tony figured out how to buy Maker is through this Uniswap pool that is 0.5% of the supply. And every 20 minutes, Tony's very rich. Tony buys $10,000 of Maker. Market buy. Every 10 minutes. That's going to happen for months and months and months and months, and you're already starting to see it compound. And I wonder if it's does it really just not take that much money to move these things? Are people front running it? is that all the buyback and just the narrative and the sentiment? It's interesting to think about.
I don't have a good sense, honestly, of the liquidity on many of these. I don't know if there's a metric that you guys look at or pay attention to determine that.
There's hundreds of millions of dollars of trading volume of Maker a day.
Yeah.
I think a lot of that is just like market makers hitting each other.
Yeah.
But like the real marginal bid is maybe 5% of that, 10% of that. And like if you're 50% of that 10%, I think you're moving the price.
You can materially change it. I mean, it also depends on, and this is where I think we're moving. Buybacks are the method of delivering value back to token holders. The venue with which you make those buybacks is really important. Are you doing this on a SEX? Are you doing this on a DEX? What liquidity pool are you choosing? What trading pair are you choosing? How often are you doing it? How big are them? How big are the buys? All of that stuff needs to kind of also, I'd say, get standardized or tested, but we're just in the like experimentation phase, and Maker is frankly the first one to really do this at scale. Yeah. But anybody who's announcing it, I think, is getting front run right now with excitement.
Yeah.
And yeah, it's just a shift back to fundamentals. It's coinciding almost perfectly with the drop in meme coins.
This episode is brought to you by Aries Markets. Aries Markets deployed on Aptos in 2022 and is now the largest lending protocol with $280 million in TVL. To learn more about Aries Markets, follow the link in the show notes below. This episode is brought to you by Marinade. Marinade is a high-performance staking delegation platform that brings both liquidity and security to the Solana network by connecting SOL holders with the best staking rates on Solana. Follow the link in today's show notes to learn more.
Yeah. I mean, one thing that I've noticed, going back to ETHDenver is, like, I was here last year. The two things that people were really excited about were AI, crypto, and Bitcoin L2s. That was the thing that people were really interested in talking about. But this has always been more of a developer-focused conference. Like, most of the talks here are very technical, and people also, infrastructure-based, and it was all like have always been excited about ZK, but there's a lot of hype around ZK TLS and stuff like that. And I think 1 year later, maybe people are a little underwhelmed with the progress that has been made on some of that stuff.
Yep.
And a lot of those very hypey narratives never really materialized. And so I think there's this muscle memory in crypto of casting around for like, what is the next meta or narrative? And it just feels like there isn't really one at the moment. But there isn't one in the sense that there's been some cool, sexy new buzzword. But there were two news stories this week that really, I mean, it's kind of crazy it didn't get more attention, that Citadel is moving into crypto.
Well, exploring.
Right? And the Bank of America CEO, Brian Moynihan, said that if regulation allows for it, he will launch a stablecoin, or they'll look into a stablecoin. That is insane. Like, if that had happened 2 years ago, those would be number one news stories. You'd be talking about that all week.
We had dinner with one of our core LPs last night, and the way we described it, what we're talking about is basically there's crypto's in a tale of two cities right now.
Yeah.
You've got down bad retail. Every single thing on the institutional, like infrastructure, regulatory. I mean, just today, we were looking at this right as we're recording this. Consensus, it looks like they're going to settle.
Yep.
And every single day this week has been another major settlement with the SEC and regulators. Like, the most bullish possible backdrop of things are happening. It's not landing because you have this overarching, low liquidity, no bid, meme coins dying, the speculative fervor dying. All of that stuff is overriding the market right now, but the fundamentals have never been better.
Yeah.
So great time to be investing.
Cooked on memes.
Cooked.
Like, the pumped out fund chart. I'm sure the zero coins bonded yesterday.
Yeah.
Zero coins graduated.
The guy that tweeted that, he did it at the beginning of the day. So it would have been, it would be like 200 though. It's very de minimis amount.
It's dropping off precipitously.
Is it the open sea of this cycle?
Too hard. I mean,
it's too soon.
They're
but
still
that's
doing
the risk.
like
that's
$500,000 in fees a day, but like
too hard to tell. I think the other thing that I was talking to somebody about, I was trying to overlay meme coins with the NFT craze. Mm-hmm. There's a lot of similarities. 18 months basically from start to finish of the NFT craze coincided with the other side mint being kind of the pinnacle, and then everything fell off. You could look at meme coins and say Trump Melania was the pinnacle, and then everything fell off. And what we were talking about was basically how, is this closer to NFTs or is this closer to ICOs, like the ICO craze? And he had a great point, which was the difference is when you were in the ICO craze, a lot of people made a lot of money on ICOs.
Yeah.
I don't think that many people made a lot of money on meme coins.
I agree.
And it's kind of similar to the NFTs where there's some people who definitely made money on NFTs. The people who made the most amount of money on NFTs were the issuers.
Yep.
The people who made the most amount of money on meme coins were the issuers. And they were just they were fleecing retail. And that, I think, is part of why the sentiment is so bad right now. A lot of people are making so much money off meme coins, but they're making it off of the backs of people losing on the retail side.
Yeah,
And
like this one guy on Twitter, the guy who created remember Tremp?
Yeah.
oh yeah,
And Billy, he was like CT's really changed. Like, this shit sucks now. It's like, well, you were CTOing vaporware from 0 to like 100 mil,
Yeah.
and
But,
you extracted, and now you're pissed that you can't do it anymore.
But think about the ICO craze, and granted, ICOs, I mean, that was even shorter. That was like May for basic attention token until, end of July when the SEC put out their letter and basically everything stopped. But there's a ton of people who made a ton of money
Off of
investing in ICOs.
Yeah.
And flipping them and, doing all of that. But it was a totally different market because of that.
It feels to me kind of like the end of the beginning when you have, there was this whole framework that people have about how crypto works, and you had all of these weird quirks of like the 4-year cycle and the hot ball of money and these like very specific market dynamics. And everyone's
Hot ball of money.
Yeah, everyone's just been waiting for the institutions to come in, and it feels like this is the time that that's happening. But I think people didn't really have a great set. People would just say, oh, the institutions coming must mean my bag goes up, and that's not what it necessarily means, right?
Right.
Well, it looks like a huge winner here is going to be stable coins.
Or institutions coming means my bag goes up, but it doesn't go up tomorrow or next week or
Right.
next month.
Right.
It goes up over the next 3 years.
Yeah.
But people are just not willing to wait.
Yeah.
Yeah, the PvP daily runner dynamic has killed anybody's attention span or willingness to engage. But I think on the institutional side, it's like, even for retail, they don't have the patience to learn about this protocol, that protocol, ZK-TLS, fucking bridging or whatever. Really, the only, how people select stocks is like, if you're a value investor, you go to Bloomberg, you type in an industry, you filter, low to high PE ratio, and then you're like, is this undervalued? How much cash flow is it generating? Like, today, Hyperliquid and Maker are the two things that are actually buying back their tokens in size, and it's like, it's the most important experiment in crypto today, because it's like, if buybacks work, that's the playbook. Like, you want to go get noticed, you want to, you can think of it also as like, you ever heard of like Maslow's hierarchy of needs? It's like, you need shelter, you need food, you need emotional companionship. It's like, if you think about like the bidding dynamics as well, it's like, you need a buyback. The buyback gets the liquid funds comfortable. The liquid funds bid it, and the momentum traders bid it, which gets retail interested. Retail finally notices the price going up. Then they decide to learn about it. Like, if your token is tripled in a week, you better believe that retail will go and do research. If it is flat or down, they're going to be like, why the fuck? Like, everything's flat or down. Why would I learn about this one?
Yeah.
The famous George Soros line, invest and then investigate.
Exactly.
Yeah. Do you guys think, like, just looking at, 15 years of history here now of crypto, one thing this cycle that
15 is not exactly true. I would say there's 5 years of apps.
5 years of apps, okay. But in that time, one of the things, like the hallmarks of, just from 2022 until now, Bitcoin has basically outperformed everything, which is pretty tricky. Like, Solana was running ahead for a little bit, but yeah, it's been, from my understanding, like pretty tough, especially for the liquid fund side of things. Like, if you're benchmarked to something like Bitcoin, basically no one's beating that.
It's also like the best asset on the planet.
It is a great asset. But the other thing too is, I just noticed there's very rampant like short-termism. It's like, why would you hold, like, this idea of why would you hold any alt across cycles?
Why would you hold any alt?
Yeah. That's it. That feels like a consensus.
I was going to say, there are a lot of assets that have outperformed Bitcoin. In crypto, and
I remember random small.
Well, it's because they start from a really small base.
Yeah.
Chainlink did an ICO at $32 million.
Yep.
It has far surpassed Bitcoin over that period of time.
Yeah.
I think that if you are willing to search and do the research and actually spend the time understanding these assets, you absolutely can beat Bitcoin by a multiple.
Yep.
It's just nobody has the patience. Nobody has, or they don't really have the care because they're so short-term oriented.
Yeah.
And I think that's the other part about meme coins that just eviscerated kind of the section of the market that ultimately we want and that we play in, which is long-term value.
Yeah.
And it's like the TikTok effect. Everybody just wants to flip it and make a ton of money and be done and like go chill on an island for the rest of their lives and think that that's going to be the mode. But it just doesn't happen. And
It's my last cycle.
it's like I need to make it here.
Place.
Otherwise, I'm done. Otherwise, I missed it. Otherwise, I lost
And
my
where will
opportunity.
you go? Who will have you?
Sir, where did you get this money?
Yeah, I do think though, like even 2 months ago, 3 months ago, it was like, dog with hat is the best performing asset. It's like, holy shit, it went down 90%. Like it's so day to day, week to week, depending on just like, when we film the podcast, how everybody feels, what's outperforming. I don't know if these buybacks work. Like I'm literally going to make that Laszlo hierarchy of needs just for bidding and be like, you want retail to bid your token? Start with the buyback. Then do a non-deal.
We'll start with a platform that makes money.
Start with a platform that makes money, a business that makes sense, and like I don't know, you got to break it to a lot of people where it's like the market for the winning technology product will be like 100 billion of market cap for a single project. The market for everything else could be pretty much zero.
Yeah, I do think as well, and I mean, if we're talking about long-term orientation here, institutions coming in. I mean, we talked about this a little bit before the pod, but. Before the recording, but Stripe just came out with their letter with some financial metrics which are astounding. But the big thing that I think is notable from a crypto perspective is, and the Collison brothers were just on the All In podcast talking about this as well, is like they are so focused on stablecoins. Yeah. Also, just another massive institutional win in any other market that would be major news. But I think just in the same way that the traditional technology, I mean, what was the advantage that, venture firms kind of understood in the early 2000s, and frankly, a lot of the people who were in the early 90s understood about the internet, is that the markets for these companies are just way, way bigger than people actually expect. And the ability to wait it out, I mean, this is the problem with public market liquidity. Or something similar to it. It's just people are not willing to wait because they're emotional. This is the psychology of investing or the psychology of markets. And you have to be willing to put that emotion aside. But if you're willing to wait, the markets for these are actually way, way bigger. I do think that there will be, tens of 10 billion plus opportunities, but there will also be tens of $100 billion plus protocols that are, venture backed, are around in the public. They're probably even open trading and liquid right now that are just going to be these massive scale outcomes that we don't expect to be, as big as they are. And everybody's conditioned or anchored to some price right now that is just going to look like, the Ethereum chart from 2017 compared to, where the chart is now. It's like,
there's a lot of
that
charts
massive,
like that.
There's a massive, dip, run up, whatever, and like you can't even see that price action on the chart now.
Yeah.
Also, like people fucking dunking on Chris Berniske. Like, you see that meme where it's like,
Chris catching strays this week.
Yeah. But like, I mean, we did the seed of Celestia, so we're biased, but they turned on, I think, pretty meaningful monetization basically like today.
Yeah, I saw actually literally on my way here, Mustafa was
like, this is the path.
Yeah.
And then people dunking on Berniske, it's like, you tried to dunk on him when Solana was at $8. That didn't work. Now you're going to try with Tia.
Quick shout out to today's sponsor, Aries Markets. Aries Markets deployed on Aptos in 2022 and is now among the top 10 lending protocols across all blockchains with $280 million of TVL. Aries Markets has expanded its product suite to become a fully integrated DeFi hub combining lending, borrowing, and more. In 2024 alone, Aries introduced several new features to better meet the needs of its users, including native USDT support, an incentive program, and more. Click the link at the bottom of the show notes, head over to Aries Markets, and tell them that I sent you. Hey everyone, quick shout out to today's sponsor, Marinade. Since launching in 2021, Marinade has expanded their suite of products to provide solutions for both DeFi users and TradFi, including liquid and native staking, as well as direct enterprise integrations. Marinade's platform is optimized for institutions to securely expand their exposure to Solana. Whether through the provisioning of custodial or non-custodial yield, integrating staking rewards into Solana financial products, or leveraging Marinade's best-in-market rewards rate for revenue and treasury management. Whether you're in DeFi, TradFi, or somewhere in between, Marinade has something for you. To learn more about Marinade, follow the link in today's show notes.
Yeah, so I'm just reading here. So Celestia fees, this is a tweet from Mustafa, the founder. Celestia fees are currently 1,000x lower than EIP 4844, just enough to prevent spam rather than trying to make any revenue. Starting a discussion about when, if we should increase Celestia DA fee / testing DA fee price discovery. And so, yeah, I'm a little, I mean, I'd be curious what you guys think about this as a proposal. I am of two minds about it. I could see, you know, they're in like a land grab right now for DA. And I could make the argument, okay, it doesn't necessarily make sense to raise prices now, just try to become basically just grow as fast as you can and then raise prices later. Or you can raise prices now and just prove to the market, give them a line of sight into, you know, higher revenues in the future.
It's the exact same evaluation as we were discussing earlier that Bezos was going through with Amazon.
Yep.
It's, do you want to deliver this value back to shareholders with profit, or do you want to reinvest that profit into growing your market share?
Yep.
It's a really tough question. We obviously don't have the answer, but I think that is fundamentally what these protocols are going to have to go through in the same way that companies have to go through it as they're growing as well.
You know what? There's some element too for both. Jeff Bezos did a really good job in describing his rationale to investors, and he got everyone comfortable with the reinvestment over a really long period of time. Netflix also did a really good job with this. Reed Hastings. Netflix was like one of the first stocks I ever bought when I first moved to New York.
Pretty good buy.
And they, you know, the stock used to move on two things, which was they were just expanding internationally. So there's the international subs number, but also every once in a while they would raise prices like 10%, because the fees were so low. It was like $10 a month, and they'd raise it by $1. That's a 10%.
Like $6 or something.
And every single time they did that, the stock jumped like 10% because no one churned. So
yeah, it's like you're testing the elasticity of the price.
Exactly.
And turns out
it was, so
very inelastic.
Yeah, so maybe a similar analogy here, actually.
100%.
I do think the risk of starting buybacks too early is just like the market will get addicted to it. Mm-hmm. And then if you don't have that like continued up and to the right like buyback chart,
That's the concern.
when you turn that off, it's like, oh shit, is this over?
Yeah, this is the dividend thing too. If you become a dividend stock, you can never stop the dividend, right? This is the GE dividend.
There's also the kind of famous, alleged, but I think it's been confirmed, Carl Icahn, Tim Cook dinner in 2011 or 2012.
Yeah.
Where
Buy back your stock.
Carl was basically like, Tim, you have more money than God, more cash. And Apple also has, I think they still operate it. It's basically a cash-only hedge fund based in Henderson, Nevada.
Oh, yeah. This is such a cool... I didn't know this. It's huge, right?
It's massive.
Yeah.
And I spent a summer working in the finance department there, so I got a quick view.
You know where the bodies are buried?
It's just a lot of cash.
Yeah.
There's just Donald Duck. Or
Scrooge McDuck?
Yeah. Whoever was, you know what I mean.
One of the ducks.
But he's like, you got to do something with this other than like trading around zero interest rate T-bills.
Which is so crazy that they're just like, there's no interest, so they're just like speculating.
I mean,
on
they
T-bills.
just amassed cash while there was no interest rate, and then they decided to do a buyback. And the day that buyback started to now, I would love to know the actual number, but it is one of the most incredible price charts.
Yeah.
Just like up and to the right. And I would also argue that, since 2011, Apple hasn't really innovated.
I agree with that.
They've only done iterations of iPhone. Apple Vision is interesting potentially as a new platform, but it hasn't really done well in the last year. Like they haven't had. It's been iterative changes that have built the business, and you don't have to have like world-changing new innovations every decade. If you have a strong business, strong fundamentals, and you have value accrual, the rest will take care of itself.
Yeah. They've done little things too. I mean, even the AirPods. Actually, if you've seen the revenue chart of AirPods matched up against other tech companies, it's
booming.
It's booming, yeah. But I mean, Tim Cook was more of an operator, and Steve Jobs was the innovator. So it was probably a good baton pass from really product focused innovator.
Vision Pro didn't hit though.
Vision Pro did not slap.
Scuba goggles at the top.
you guys want to talk a little bit about stablecoins in general? Like,
Yes.
this was an interesting. So obviously, the Collison brothers at Stripe have been talking about this quite a bit. They released that letter, which maybe we can talk a little bit about, and then also they were on the All In podcast, both John and Patrick, talking about how excited they were about the Bridge acquisition and stablecoins in general, and yeah, the signaling from the Bank of America CEO. I'll play a little footsie there. Like, what's going on over there in Denver?
Not used to these live recordings.
But he said something interesting too, which was he followed up that statement with, yeah, stablecoins are basically just a bank account. And that was interesting, at least for me to think about. I've sort of started to think about stablecoins as, are you guys familiar with the concept of narrow banking? This was something that people tried to push in the U.S., which is basically being able to have a bank account directly with the Federal Reserve. And so it's the most riskless form of banking. And there's always been pushback to it. I think there's a very strict regulation around who can bank directly with the Fed.
Right.
And generally, the idea has been that the Fed doesn't love that idea. One, because they're not really set up to have a lot of direct banking relationships, and two, it undermines the commercial banking system. And if you can bank directly with the Fed, why would you take any risk with the commercial banking system? But stablecoins are maybe like one to the right of banking directly with the Fed. You're taking extremely limited risk in just T-bills, right? That's essentially as close as you can get to riskless, as opposed to having a bank deposit at a commercial bank where they have a larger portfolio of different types of loans. And then the way that you make that profitable is use way, way, way less overhead than a bank. So that's sort of the lens at which I've been looking at.
That's interesting. I mean, how would you compare that to like an FDIC insured bank account where like as long as you're under 250K, like you basically do have an account with the Fed.
Yeah.
There's no risk that you're taking on because it's fully backed by the US government, et cetera, et cetera. I do think, I mean, frankly, I think stablecoins, I mean, part of the conversation last night was like, what's working? And it's like, guys, look at stablecoins.
Yeah.
It is the thing.
That is consumer crypto in my mind, by the way.
It is consumer crypto. It has consumer adoption. It's happening beneath the surface, but it's also kind of starting to permeate into above the surface. Like Stripe bought $1 billion company just to do stablecoins. Tether is the most profitable financial services business on the face of the planet. Like, stablecoins are absolutely working. And I think exporting stablecoins to other countries and using stablecoins as a tool to build businesses around them is the next iteration. Whether this means, insurance products that are exporting, US dollar stablecoin to reduce currency risk, whether this means, building platforms that enable real world assets in other countries that you wouldn't have access to, like that is the future of crypto in my mind. Yeah. Stablecoins is the enabler. It's also historically been extremely difficult to invest in stablecoins. So, like, how do you do it? Yeah. Is kind of the question. You could have the thesis right, but like the implementation is the hard part. Yeah. But what will be interesting, and maybe something to talk about too, is like what happens with regulation. Yeah. And there's rumors of a stablecoin bill kind of working its way through chambers, and we can talk about Vance's perspective, but generally, like, how will stablecoins work? How will they operate? Who regulates them? Those are the big questions that I think will define the market. And one of the things we were talking about with our LPs last night is like what changes like the broader sentiment from the allocator perspective. Yeah. Because it's like big fish eats smaller fish, eats each small fish. Like the allocators and like whether this is endowments or pension funds, whatever, they need to get on board with the industry to start allocating more capital to the venture funds who can then invest in the companies who are building and doing real shit. And one of the catalysts that they thought could be close to the horizon is like actually understanding what the stablecoin bill is and actually having it go through. Yeah. And that being like, okay, great. Like stablecoins is working. It's a massive industry. It's the most widely adopted product market fit right now in crypto. Yeah. And it's just been blessed by the U.S. government. Yeah. Boom, game on.
Yeah. Okay. Vance, maybe this is a good time to talk about this tweet of yours. I'm just going to read this.
It's too long to read.
Okay.
It's too long
All right, let me give you the TLDR. I don't usually comment directly on regulation, but a soon-to-be-revealed stablecoin markup apparently has requirements to shut off access to the treasury market to centralize international stablecoin issuers, which is straight up batshit crazy. and basically talk about an incumbent that is trying to shape regulatory interest in their way. I think this was actually reported on, so we can just use like right. Circle, right, is attempting to influence regulation here and shut off international issuers, and obviously that's probably Tether, right? It's the most impacted stablecoin there. So just talk a little bit about your perspective and what you see happening behind the scenes.
So the first thing I would say is like the stablecoin market as a whole, like Tether is large, it's organically driven. How can you tell it's organically driven? They're spitting off tons of profits.
Yeah.
You know, I think they did 14 billion last year, which means like there's very little incentives being paid for people to hold stablecoins on chain. So like they are the stablecoin market. We don't know as much about Circle, but like the last secondaries that we're clearing on the Circle IPO were like 3 or 4 billion, and so like how are those
for the value of the company?
For the value of the company, and what that means to me, and what we've heard from exchanges, market makers, there's heavy incentive programs to get the supply of USDC up. So like, you know, Mike, I give you $1 of USDC to put on chain, and I'll pay you 20 cents a year.
Yeah.
You know, and just keep it on there, make sure the supply doesn't leak.
And this happens on Coinbase too. Coinbase offers, you know, whatever the rate is. A while ago, it was 4% to have USDC.
It's like between 4 and 5%.
Yeah,
still on the platform.
That's not like a stable coin. That's like something else that's like being incentivized, and it's
a tokenized treasury.
Right. It's important to understand like the stablecoin market, as we understand it, is Tether.
Yep.
It's not USDC. USDC is like kind of incentivized. It's kind of hard to tell, and so like when there's things happening behind the scenes where it's like Circle's throwing their weight around to, you know, push Tether out of the secondary treasury market for treasuries, or have them subject to extraterritoriality, where even if you're issuing or, you know, provisioning stablecoins overseas, you need to fall into the U.S. regulatory framework. It just completely kills the stablecoin market in the sense that like it's not like USDC is just going to take over the USDT business, just like the USDT business is going to go down, which is bad for everyone. And so we'll see what happens with the stablecoin bill markup. But my tweet was just in response to hearing that there was people thinking about putting these markups into the bill, and brushing them back from the plate a little bit, just saying like, look, like if the regulations are going to happen, and we've been waiting for regulations for 15 years, it's not just going to be this thing where it's like behind closed doors, and we'll, you know, get a senator to slip something in there and something in here. Like, we actually have to make our voices heard and have a discussion about it.
Traders, AI enthusiasts, and degens, listen up. The game is changing, and Desk is leading the charge. To celebrate their launch, Desk is running a trading campaign with 3 major highlights. 38% of their token supply will be allocated to airdrops. They're offering the lowest trading fees on Earth, and finally, they will be running a Desk referral program. The more people you invite, the bigger your rewards will be. To get started, click the link in the show notes below and make sure to follow at Trade on Desk. This episode is brought to you by Morpho. Morpho is the first and only DeFi protocol Coinbase has integrated directly into their main app, giving millions of users access to borrow against their Bitcoin on Coinbase. Just as Web 2 companies like Google, Amazon, and Meta were built on internet protocols, the largest financial companies of the future, such as Coinbase, will build on decentralized protocols like Morpho. Whether you're an individual, fund, fintech, or institution, Morpho is for you. Follow the link in today's show notes to try Morpho today.
So actually there was, this is an interesting topic to me in general about how you position yourself within the scope of regulation. I remember, do you guys ever read Matt Levine, the Bloomberg guy? He wrote about this actually with Coinbase and BlockFi. It was kind of a pro-crypto take back in, must have been like 2022 or something like that. Well, actually before BlockFi. Yeah. But he basically said, look, BlockFi was getting sued at the time, and his commentary was a strategy, right, when you have a new market is you can either kind of go outside of the rules or you can try to be regulated. And the advantage of being like the strategy of trying to get regulated is you have to spend a lot more money and go more slowly, but then you can kind of try to write or influence the rule book in your favor. And he just kind of described them as different strategies. And, you know, there's obviously been an enormous amount of indictments and lawsuits, and, you know, the combo of like Coinbase and Ripple, right, have spent hundreds of millions or tens of millions of dollars, hundreds of millions of dollars basically fighting these entities and advocating on behalf of the industry. And it's been sort of a group win. So how do you guys think about that strategy in general? When I think about Coinbase, it's kind of like, I don't really want them to be able to shape regulation, but at the same time, they're probably pretty good actors and they put up a ton of money for the industry. So how do you guys kind of think about?
It's the Bill Gurley, you know, regulation favors the incumbents.
Yeah.
I think that, I mean, this is also just like the fine balance, right? This is like do you go full Travis Kalanick and say we're not Uber Cab anymore. We're just Uber.
Yeah.
Like we're not a cab company. We're a ride sharing company. Do you kind of operate within the gray area for a period of time, knowing that you'll be on the right side of regulatory history?
Yeah.
I think that's kind of that's the calculus, and that is what these founders need to do. I think they've kind of chosen their sides, and there's the Tether path and there's a Circle path. They're just totally different paths.
Yeah.
But I think ultimately what this comes down to is what gets put into that bill.
Yeah.
And is it 100% favoring the incumbent onshore U.S. entity?
Yeah.
Or is it something that's a little bit more open and something that allows for new entrants and competition?
Yeah.
And ultimately, that's what we want.
Do you guys get the sense that the government is starting to think of stablecoin issuers as buyers of U.S. government debt, and that being a massive boon?
Absolutely.
Right? Because there are all these games that have been played recently around, like, Janet Yellen has been very interesting in how she's decided to issue, like where she's decided to issue duration-wise, like bills versus bonds ratio and things like that. And I wonder if stablecoins, and you see this as well with like banks adjusting the SLR sort of requirements and stuff like, and it's all tweaking, to get at where they want the yield curve to be, basically. And it feels like stablecoins are just a new tool for that.
It's a new market.
Yeah.
Tether would be the 36th largest holder of treasuries if it was a country between Germany and Taiwan.
That's insane.
I don't even think that this is like a do we need this, do we not? Like we
absolutely need this.
Absolutely need this.
Yeah.
We need to
question.
refinance $9 trillion of debt this year. If we can look like Tether is probably doubling year over year. If they can subsume $500 billion of that, that's a big boon for the entire U.S. complex. But Circle doesn't have access to the consumers that would buy the stable coins, that would buy the treasuries. It's not like we can just hot swap, one for the other.
Let me get this chart. Is the craziest thing. Oh yeah, we're not on video.
I was gonna say, put it on screen, Mike.
You had to be there.
But it's nuts. It's crazy. This is, on October of 2022, the Tether market cap was 69 billion. Today it's just under. It's like just under 150.
Yep.
140.
Maybe the quote from the Stripe letter as well. Improvements to the basic usability of money make economies more prosperous. Consider the transition from coins to banknotes, from the gold standard to fiat currency, and from paper instruments to electronic payments. Stablecoins are a new such branch of the money tree. Such transitions happen with some regularity over the centuries, and the effects tend to be large. This is clearly like their next big thing.
Right. You know what? You know who else? So I know we've talked about this before, but I can't really remember what your guys' take was on this. I'm just going to ask you again. But I saw Vlad Tenev, also of Robinhood, talking about leaning in.
I love his like NBA basketball press conference earnings streams. It's so funny with the logos.
It's not just Stripe is the point.
It's Hood.
It's Hood. It's all of the major financial institutions are looking at stablecoins, and frankly, they're waiting for regulation. And Brian Moynihan from Bank of America said the same thing. And they're the largest credit card, maybe second largest credit card purveyor in the U.S. Like his quote, and I'm paraphrasing here, is stablecoins look a lot like tokenized deposits.
Yep.
And we've got a lot of those.
Yeah.
It's like that's exactly what they should be doing.
Who do you guys think wins with these new issuers? Like if you had to try to take a guess at Bank of America versus Robinhood. We've talked about the importance of exchanges and being distribution hubs for stablecoins in the past. And then also, how do you think whose market share gets eaten here? Like if you kind of looked at the major buckets of stablecoin market share, Tether is kind of in a league of their own, but it's sort of USDT and USDC, and then
I actually don't think that it's as zero sum as that.
Yeah.
I think what you're going to have is probably a tokenized representation of whatever account deposit you have at these banks.
Yeah.
A Chase stablecoin, a Bank of America stablecoin, a Wells coin, and the stablecoin regulation will dictate whether or not those things can be moved off platform.
Yep.
Maybe there's an on-platform instance, like a walled garden approach of, you want to, have a lending product, a mortgage product, you want to have a CD, you want to have a money market account. All of that happens with your Wells USD.
Yeah.
and it's in this ecosystem.
Yeah.
If you want to swap it out, you got to go through a wire transfer. You got to do it through some swap. I mean, that begs the question as to like, what's the swapping mechanism? Is that Citadel, for instance, who's enabling those markets and market making, that liquidity? I think the crypto native approach increases. The total stablecoin supply in a world where you've got every single major bank issuing their own coin and tokenizing it only increases. It doesn't necessarily, it's not like a balloon where you squeeze one end and the other end pops bigger. It's like the balloon gets bigger. Maybe there's a relative shift, and the implementation details kind of dictate this. Maybe there's a relative shift towards one of the more regulated approaches because maybe that's going to be the onboarding mechanism to these banks. But I think the pie just gets way, way bigger.
Yeah, tether to $1 trillion, I think, in the next couple of years, and they will probably continue to win dollarizing, Asian and Latin American and Western and Eastern Europe economies. I think that's the prognosis for Tether. Like what I would be excited about with like Bank of America is like more of kind of like a lending use case for stablecoins, where it's like, okay, go tokenize BlackRock private credit. Okay, then you can borrow against that, and like if the NAV of the BlackRock private credit goes below the lick threshold, you auto sell it. Like there's a lot of efficiencies to be gained from that type of stuff.
I have a question about. So I was speaking with Luca Prosperi, the founder of M0 or MStable, and he was describing his vision of the future is that basically all of these banks and fintechs will launch their own stablecoin, and at that the way that gets abstracted from the user. If you kind of right now there are kind of enough stables that you can keep track of, like USDC, USDT, USDS, whatever. Yeah. But in a world where there are 100 of these things, right, that just becomes completely untenable for the. There are just not enough mind share, right, for 100 different brands of stablecoins. So it feels like where we're going is that it's just USD, right? Like you just see USD on the platform. So how is the end state different? I'm just trying to imagine because that's basically what the end state that we're describing there is each issuer. You just see USD. They are the issuer of their own stablecoin, and then it's the public rails on the back end. That looks a lot like what it actually looks like today, right? Which is all these USDs are like JPM USD, BOA USD. They're all issued from their liabilities of a specific bank. And then there's ACH rails on the back end where you actually can send things cross-border and stuff like that. We've just, through regulation made that more difficult and costly. So is the idea that the end state here is we're just building global rails with less regulation, or how's the end state different?
I think where this gets interesting is you have a walled garden approach within, Bank of America, let's say.
Yep.
Let's say you've got, your mortgage, which is an asset. Maybe it's an NFT that's on chain that represents your house and the deed to your house. You're borrowing, and you can see literally the interest accruing. You can see the payments that you're making. All of that exists within within the Bank of America instance. I think where this gets really interesting is, twofold. One, maybe you've got a tokenized representation of B of A USD. Yeah. And on the front end, bankofamerica.com, everything looks the exact same. Yeah. It's the same user experience. It looks like USD. You don't understand that there's tokens behind the UI, but for people that care about it, there are. And maybe you want to get a deeper look at the financial services and the underpinning of what's actually going on. You want to see, the assets on chain, et cetera. Yeah. Maybe if you're not an individual, maybe you're an institution or something that has to have audits. They need to see these things on chain. They don't just get a screenshot of your bank account and you send that to the auditor every year. It's like, no, here's literally our wallet with all the assets in it, and they're represented in tokenized form. That I think is valuable. The other thing that I think is valuable, especially for us crypto natives, what if you're able to say, I want to transfer, this dollar or these dollars, I want to send them to my Ethereum address.
Yeah.
And that automatically swaps from B of A coin to USDT or USDC. How do you want to receive it? Where do you want to receive it? That wallet is whitelisted so that B of A knows that that's one of yours, that you've signed a message, you verified it, it's yours. They can they can understand that there's full KYC. Once it moves out of the wallet, it's not anything that they have purview into, but that wallet itself is yours. So it's like transferring to a new account, but it's in tokenized form, and you can literally see that show up in your wallet. And where this really gets interesting, I think, is once you are able to actually take some of the assets that are in your Bank of America instance and bring them into crypto. And maybe you paid off your mortgage, you've got your house, or maybe a private credit instance. And that's where you can actually have interesting financial services within crypto from a Bank of America issued asset.
It's it's what this reminds me of a little bit. So first of all, I completely agree. That's really interesting way to describe it, and I do think over time, maybe a lot of these ideas, because we used to talk about this back in like 2017 too, right? There was sort of this initial cohort of like the blockchain, not Bitcoin people. I think I remember maybe a year and a half ago on this show actually showing you a snippet of something that Goldman Sachs said was going to be on the block. Like money market funds are going to be on the blockchain. This is going to be on the blockchain.
They were right. It just kind of like took a different
It took a different kind of route of getting there. You know what made me think about this week too is like Kaido, just looking at what they've done with Yaps and everything. It's super interesting. They basically have built the equivalent of an on-chain influencer marketing business.
Yep.
And this is something that
What's crazy is that all the influencers sold their airdrop on day one.
I know.
Pretty dumb.
It's just so interesting. This is one of those things I heard bandied around, like rewards, influencer marketing, things. People used to talk about this in 2017.
Totally.
But they just kind of slapped on what it looked like historically, and obviously now the successful version of that just looks different in crypto.
Right. There's success stories happening. It just feels like people don't want to hear them.
I agree. Also, it's... the game
and also if everything isn't succeeding, then somehow nothing is succeeding.
Or if everything isn't succeeding on the timeline that I've stipulated in my head, then it's not working.
Also, we were gambling on Trombet 6 years ago. That was we were this is I guess this is the industry. And it's now it's there's 10 times as many stablecoins, 10 times as many users, and we just can't take the dub because various reasons, but I think mostly it's people come into crypto sometimes because they just think it's easy wins.
Totally.
And there's no more easy wins in crypto.
What might be a little different too is even in the past, everyone was kind of up or down at the same time, right? You might be, and you would, maybe you weren't in the stupidest, hypiest thing who was up 100%, but you'd be like, all right, at least I'm up, my ETH bags are up a 2 or 5x from last year or whatever. But
if
now
ETH goes up 2x, this will go up 200x.
Right. But now it's possible that you could be flat to down when other people are up. That's a kind of a new thing, and I wonder if that's partially why
it's a part of the market structure maturing.
Do you remember when all the SaaS companies were up in 2021 in unison?
Do you remember when all the SaaS companies in
also the fucking Virgin Galactic chart is so
the SPACs? Yeah,
2018 there was the SaaS Armageddon. Remember that one day where LinkedIn went down? They beat it.
What do they call that? It's something Quake or the SaaS.
Yeah,
Quake
SaaS
or
Quake, something like that. I was at Dropbox at the time, or no, I was there. 2014 I think, and LinkedIn beat earnings but dropped 40%. And it was wait, what happened? And everyone's SaaS sucks as a business model.
Really?
Yes.
Every 4 or 5 years it happens, but now even the dispersions within SaaS are so large, and it's not the usual suspects. That's the one the App11, which was the biggest runner of last year in the SaaS industry. What did it go up last year? 4x or something? 5x?
Yeah.
They just proved out their business model. It was kind of this company that had been left for dead, but they had the actual traction and fundamentals.
It was a $25 billion company. But then, and now it's 100.
Okay, so
125.
Another example is Robinhood.
Yeah,
totally.
Went to $6 billion. Now it's at $45 billion.
Yeah,
but backed is 0.
Right.
If people want to look, I haven't checked it in the last couple of weeks, but Robinhood's got one of the craziest charts out there today.
It's has the Tony Hawk half pipe.
It does.
X Games chart.
Nuts. All right, maybe we should. Do you guys want to just end talking about this ByBit hack? Which is largest.
You mean
ever.
the Gnosis hack?
The Gnosis, actually, which is kind of scarier, I think.
Yeah.
So I actually understood what happened. I had a smart developer tell me. So Lazarus hacked a developer machine of Safe.
Yes, of Gnosis.
Of Gnosis. So the developer that uploads the new software to the Safe website, his machine was attacked.
Yes.
And so the software that was used to attack ByBit, actually everyone who had Safe had that software installed as well. But they only had one shot to use the exploit.
And they chose ByBit.
And so they were waiting for this huge transaction to happen. It didn't necessarily need to be ByBit. It could have been anybody that was moving huge amounts of size, but like,
Wow.
you needed that big wallet to activate a transaction so that you could basically be like, okay, like I'm gonna redirect this.
In computer virus terminology, this is what you call a 0-day attack.
Ooh, that's terrifying, man. That is,
And
It's where you infect all of it and
then
you
you
wait
wait.
for your opportune moment.
yeah.
right. That's crazy to me.
And so similar thing, fun little story. When what's the name of the team, the Israeli Defense Force?
Mossad.
Unit something.
Unit like 8200 or something
yeah.
like that. Anyways, it's like the cybersecurity team. The way that they did Stuxnet.
I love this. Tell the story. I love this
This
story.
is so what they did is they knew that they couldn't get software into the actual centrifuges, into the uranium enriching computers within Iran. And so what they decided to do instead was they just infected every computer that was running Microsoft Windows. So every single computer in the world that was running Microsoft Windows had the same patch, the same software, and they just chose to target the computers that were enriching the uranium in Iran. And it lasted for years too. Like they literally would hyperspin. They would go off, like they'd blow up. They couldn't figure out why, and they were just like toying with them for this entire time. And then finally, they were like, "Yeah, that was us."
I mean, it's just so crazy that like they probably had a bunch of like probably not $1.5 billion, wallet transfers, but like they probably saw a couple guys doing like 300 or 400 million, transfers, and they're like, not yet.
And so specifically what they did was they injected a new form of JavaScript into the front end that made it look and feel like it was the expected, safe multi-sig transaction. And in reality, it was altering that and sending different, call data on the back end.
Yeah.
And yeah, it's just like pretty insane, the capabilities that they have. I do, fortunately, ByBit is in a position where they can cover it. The ETH price helps.
yeah.
Well, they haven't covered it all yet, I don't think. I guess
No,
they got,
but
like,
you'd
loans
assume
and
that
stuff.
they got loans to.
They got a loan from Binance, right?
Yeah,
A bridge loan?
and a number of others stepped in. I mean, this is the industry stepping in. I did hear a couple of really terrible takes of like, this is FTX equivalent. It's like, no, FTX was fraud.
Who
that
said
was
that?
crime.
I saw someone shitting on those takes, but I didn't see who.
There were a couple of those takes. I won't
my
name
God.
names, but
Yeah.
this is like a hack. This is the industry rallying
Was it
together.
Adam Cochran?
No comment. the industry rallied together immediately, and quelled the storm. I think that ByBit will be able to fully back all of this with the revenue that they're generating, or maybe the assets that they already have. Like, I don't know exactly what their plan is, but not worried about them at all. And also, like, kudos to the ByBit team, like hopping on a live stream immediately.
I thought they did
That
such
dude
a
looked
good
like
job.
a Chinese supervillain. I mean, it was confidence-inducing.
It was just impressive. Just like, all right, let's talk about it. Here's what happened. I mean, they published the conclusion.
The guy seemed like he had like, he's like, God, like, yeah, I'll hop on a stream, but like, I got better shit to do than this. It's like, I'm not worried at all.
I mean, he posted. Okay, so this is the coolest thing. As an avid Whoop user, he posted his Whoop. Do you see that?
Yeah,
What's
no
a
sleep.
No, it's like
I
the
saw
fitness.
this, yeah.
No sleep. Also, just like in a point of high stress because it
Yeah.
like tracks your heart rate variability. It's like point of high stress for like 17 hours. Like, poor dude. Tough time,
What a
but
G.
made it through. I think. It's also really interesting too now that Lazarus is like one of the largest owners of ETH.
Yeah.
Well, they're using Thorchain to bridge to.
Okay, I saw that. So I saw
Bitcoin.
one of the founders, I think, of Thorchain.
Look at all this adoption.
And it's like, it's
Bro.
such a funny flex because you're literally flexing about laundering, like, Lazarus Group
and,
stolen funds.
we're obviously bad biased.
Also, like, the U.S. government is gonna fuck you up.
Right. We're bad biased. We're supporters of Chainflip, which is, another kind of like cross asset swapping platform. Respect to them. They literally immediately took down the front end. The front end is now back up. They bricked all the capabilities of using that ETH to be able to swap within Chainflip. Like, that's the approach that the industry needs to take. We can't have this like ultimate decentralization at
Code is law.
Code is law. Like, at the cost of potentially giving Lazarus $1.5 billion.
You know what made me think about was it's such a hard value proposition for true censorship resistance, because the best, commercial you could ever have for censorship resistance, ironically, is North Korea being able to send funds through your system and that's just such a tough commercial, but that's like the iron test, right?
If you want permanent censorship resistance, get used to markets like we're in right now.
Yeah.
If you want to actually grow and build and have, where we expect things to be in the next few years, get used to a little bit of light censorship resistant.
Yeah.
Who the fuck is LPing in Thorchain for like?
Didn't they also freeze? I can't really remember.
They froze Thor lending because they bricked that by a stupid token design. But
yeah.
Thor swap still works.
Yeah, Thor swap still works. They've also had like massive outflows of LPs, massive outflows of node operators. Like there was potential. There's like $100 million of bad debt that they have to.
Yeah, like who's standing up for Thorchain being like, it's the right thing to do.
They're an easy target right now, but I think generally, like philosophically, what we need to do is more of what we've, I think, seen, which is we have to understand this is bad, this hurts our industry,
this is
and
bad.
we need to collectively work together to solve these issues when they come up.
There's no one that's really on the side, especially in Washington. Like, there's no one on the side of being able to.
No,
and that extends to a lot of different projects. Like if you're not US based and complying with US laws and regulation, there's no people who have an incentive to stand up and defend you.
And imagine, let's say election went the other way. Imagine how bad this would be for us right now. Like this could have potentially been a death blow.
Yeah, and it doesn't look good anyway. It feels like Lazarus is a pretty big or mid-sized problem for the industry.
It's a massive industry.
Mid-size. They're the biggest hack ever.
Right.
That surprised me. I had thought that the Bitfinex in hack in Bitcoin terms would have been larger, but no, this is the largest.
This is the largest in dollar
one.
value.
In dollar value.
Yeah.
Obviously, the DAO hack was bigger in total number of units. But
Yeah.
Wild. That was 10 million, 11 million ETH or something.
I don't think it was that much.
No?
I can't remember.
Wild. All right, fellas.
Should we wrap it?
Yeah, let's wrap it. This was a fun
to do in
one.
person?
Good to do IRL. Yeah, we'll have to do it again.
Sorry I didn't get to see our mugs, but probably for the best.
Probably for the best.
We'll
Probably
hang
for the
over
best. Yeah.
Hello.
All right, guys.
Okay, bye.
All right.
See you next
ya.
week.